Thank you, everybody. Just a show of hands, who here does not know what blockchain is, or Bitcoin? So the majority are well informed. I'll try to keep the conversation as general as possible so as to not alienate some of you. So let's welcome to the floor Mark Smith, Joel Cano, and Manie Eagar. Thank you very much, gentlemen. So a little bit about blockchain technologies, since most of you know, but for those of you who don't. Blockchain technologies, also known as distributed ledger technologies, has been known to disintermediate certain processes within the banking industry. It started with a little digital currency known as Bitcoin. Bitcoin is a value that was being transferred through the blockchain. So think of the blockchain as the highway and the Bitcoin as the little car. So you can move value from point A to point B just in the same way as you sent an email from one person to another person. So the beauty about this is that any value that was moved from point A to point B now becomes distributed through a shared ledger that everyone in the Bitcoin blockchain gets a copy of. So the transactions remain immutable, irreversible, and permanent. A very interesting development, and with the potential, pregnant with the ability of changing many of the financial transactions and ways in which banks, in particular, do certain things. I could expand more, but for the purposes of our time and to give some of our panelists a little bit of an opportunity to talk about themselves and what they do and why they're here, I will leave it as that, and we'll get into more about what blockchain is and distributed ledger is in the Q&A. For now, I will introduce my friend and colleague, Mark Smith of Symbiont, and he will tell you a little bit about what he does. And then I'll move to Joel Cano and Manie Smith thereafter. So gentlemen, please, just a little bit about yourselves. Keep it to a minute or so. Thank you.
Thank you, Arie, and thank you, Finnovista, for inviting me to the Finnosummit. I'm very excited to be here. Again, my name is Mark Smith. I'm the CEO of Symbiont. I'm 20 plus years in disruptive fintech, so I've been an outsider and an insider, and now I'm an outsider again, happily. What we do at Symbiont is we are a capital markets infrastructure company that uses distributed ledger technology like the Bitcoin blockchain to create smart contracts, which we can go into detail about later, to solve major problems in capital markets, specifically around the friction in clearing and settlement, but also in the structure and creation of property rights in places like LATAM, where rule of law isn't as strong as it is in developed countries.
Thank you, Mark. Joel?
Hi, thank you. My name is Joel Cano. I am the CEO of meXBT, one of the leading exchanges for Bitcoin in Mexico and some other parts of the world. My experience with technology, it's a little bit longer. It's at the early 90s. I was one of the first employees for Microsoft in Latin America to help them introduce a very cool technology called Windows that all of you know now probably. And then I got into basically venture capital projects, and that led me to the fintech arena, which I think is one of the hottest angel investing opportunities and venture capital opportunities today.
Thank you. Manie.
Hi, Manie Eagar. Great to be here. Heard a lot about Mexico City, and what's going to happen here in the fintech space. So good to see things are starting to happen. A little bit of my history. I originally from South Africa, moved to Canada 5 years ago, originally Toronto and now Vancouver. Deeply involved in the startup and mentoring entrepreneurs space. And 3 years ago, people started coming to me saying, I need to be mentored, I'm doing this Bitcoin thing. In those days, everyone did a Bitcoin wallet or wanted to be the next or first exchange. So I myself had to go back and learn about this stuff and read Satoshi Nakamoto's white paper and try and figure it all out. Today, it's all history. If the authors of Wall Street Journal who wrote a book, which I recommend you all read, The Age of Cryptocurrency, wrote that book today, it would be the age of blockchain. So things are moving quite fast. It's great fun trying to keep up with the youngsters and the new startup ventures. I'm CEO of the Blockchain Lab, and where we see the next phase of this, and I think your initial speaker touched on a few key points, is to create that bridge between the startups and enterprise and government to make sure there's a smooth journey in terms of taking advantage of these new technology opportunities, which we're going to talk about a lot more further on. Thanks.
All right, so in my world, previously as a banker, recovering banker, I might say, right now, just left Morgan Stanley in April, so I've just joined these fine gentlemen in the world of entrepreneurship and technology. We thought distributed ledgers, distributed ledger technologies were to finance what the internet was to commerce. And some mates of mine and I decided to start a Bitcoin forum inside of Morgan Stanley to see how that was going to be received. So for you, I pose the question, how disruptive is this distributed ledger technologies? And in particular, for LATAM, with the subset consideration for payments, which has been the most obvious utility application for distributed ledgers. Mark, you go first.
So how disruptive do you want it to be, I think is the question, right? So it's difficult for us to keep things very narrowly focused. This technology is extremely powerful. It can do many things. But when you have something that powerful and you talk about the many things it could do, sometimes that gets lost in the gray-white noise. And then it seems like it can't do anything. So when you look at places like LATAM, I think the biggest benefit comes in the developing countries where you can leapfrog, just like we did in telecom. So developing countries that never laid a landline were able to leapfrog with telecom and now are ahead of developing countries in some instances. If you look at places like Kenya, more people have phones. They can actually use Bitcoin as payment. They've joined the global economy on their phone. So I think the disruption can be massive, but I wouldn't actually call it as much disruptive in those areas as it is pure, true innovation into a vacuum.
Thank you. Joel?
When we see the payment space, we actually see it as you know, 4 areas of potential innovation. I think there is, you know, the B2C credit, the B2C debit opportunities, and I think those can be very disruptive. But where we see more interesting disruption is actually on the right side of the chart, where you see the B2B payments. I mean, between companies, and then the C2C, which is of course the famous remittance market. So I think when we look at innovation and we define models or business models for innovation, we really should look in different ways the payment universe or the payment arena. I think we cannot treat the same. There are not the same players, you know, in each one of these 4 buckets. So it's going to be disruptive in each one of them, but I think we need to see different, and we need to see the different players and the different business models that each one of those will represent in the future.
And it does dovetail to what Mark said with regards to the differences, since LATAM in general and the developing nations do see the utility of an application that is as innovative as this against, say, the United States or other more developed countries. So spot on, agreed.
Of course, and I think, we talk a lot about the unbanked people, but I think the most interesting opportunity right now is not actually on the unbanked, but really the underbanked. People that already have some services, but not fully service it.
Familiar enough with technology.
Latin America is huge. Yeah.
Yes, many.
If I may ask, who in the audience has done a Bitcoin transaction before? And everyone who's not putting your hands up have never done anything like this before, I assume. I'll give you a quick example, why this is such an astounding discovery, and then I'll do a little leapfrog for you. If you imagine that you could sit, as like in this audience, in front of each other, and you have an app on your phone, each one of us, and you have an amount of money, an amount of Bitcoin, in this case, on each phone, and you send the money back and forth. And one of us decide to get on a plane and fly to Shanghai in China. And we can carry on sending money back and forth to each other as if we're in the same room. It sounds like a very simple innovation, but the implication of that is huge. Because I could decide, or you could arrive in Shanghai and decide you want to buy a business. And you send me a message and say, can you please send me $3 million? Not just $1, as we played with a few minutes ago. And suddenly this whole scenario becomes very, very real. Forward wind to where we are today, I was called into a meeting last week between two government agencies involved in trade and investment, and they said, Manie, can you, the Blockchain Lab, please advise us how we can use these technologies, these innovations, from Bitcoin to blockchain to smooth trade and investment globally in the future. And these are two major countries that are starting to put some major trade and investment deals together. Then you start getting a grasp of where this could go, the kind of attention that it's getting, and the potential applications that it can achieve. In terms of remittances, if you take this analogy further, and in Latin America and Mexico specifically, one of the largest remittance markets for your diaspora in the world, the implications of smooth, frictionless, and almost free transactioning and remittances is incredible.
Free and fast.
Yes.
Okay, so as Mark said earlier, it is true that an innovative technology that has the ability to disrupt markets the way distributed ledger technologies or blockchain technologies can do, it is hard to focus since it is so powerful. It is, in our view, something that we are focusing on vis-a-vis finance and banking. Blockchain technologies, distributed ledger technologies, according to Singularity University, will disintermediate or change the way lawyers do business, the way accountants do business, the way many people do business. But, to the panel, how and in what specific opportunities do you personally see distributed ledger technologies in banking have the opportunity to innovate and, in some cases, disintermediate? Mark.
Our focus at Symbiont is to be that under-the-covers, really dirty, roll-up-your-sleeves infrastructure company. And I think the initial keynote speaker touched on that. And so we're passionate about doing the dirty work, right? That's exciting to us, because that's where real change occurs. Where we see some things, I'll give you a real-world example. Since the global financial meltdown, lending has changed dramatically. Banks now lend about 10% of all the loans that exist that originated. And syndicated loans are a big thing that people are talking about now, because that has exploded since the crisis. There are 2 million faxes received on average for the major institutions who service these syndicated loans on an annual basis. The estimate is in 2014 there were 25 million faxes to initiate and fund those loans. With this type of technology, distributed ledger in conjunction with smart contracts, we can take that to zero. That's the kind of stuff that really makes a change. 17 disparate ledgers that have to reconcile amongst one another. If you're in banking, you're in financial tech, how often do you spend time reconciling?
No time.
amazing how much time and effort and cost and how often are you still out at the end of the day when you attempted to reconcile. With this technology, there is no more concept of reconciliation. Everything happens at the point of transaction. That's a reckoning. That's a huge change. And that's where we see the biggest opportunities in those rudimentary systems that exist today and the rudimentary way that financial markets operate around reconciliation. Just simply changing those things will be extremely powerful.
I'm going to come back to you on that subject in particular for something that is being called continuous real-time auditing, a very powerful opportunity. Joel, back to the original question.
Yes, our focus right now, it's more on the exchange side. I think one of the debates is always, about the blockchain and the Bitcoin, and if you can really separate both. I think we need first to create the liquidity in the markets, in Latin America specifically, in order to be able to operate the blockchain. And for us, trading today, exchange trading, is basically our necessary loss leader, right? So we are penetrating the market very fast. We see that there is a lot of opportunity there, and we are growing really, really fast, 30% every month. But really, to build on top of that, a cross-border payment platform, basically B2B payables, which is our focus, and providing services for small and medium companies to be able to transfer pesos to any other fiat money that they want. I think people today really don't care about the Bitcoin as the money. They really care more about moving their money fast, using any technology available. And I think that's where the value proposition, the disruptive value proposition, is going to be. And if you take B2B payables, there is of course an opportunity that will be on taking some fees from the current financial industry. But the most important part for the small and medium businesses, I think, it's actually a business process outsourcing process that we can run on top of the platforms and provide services for the companies that want to pay somebody abroad. So right now we are basically building corridors between Mexican pesos and yuans, Mexican pesos and Brazilian reals, and Mexican pesos and Singapore dollars, and Mexican pesos and Indonesian rupiahs with our own platform. So at some point you will be able to enter one single platform and move your money from one part to another at a very low cost and a very fast mode.
Thank you. Manie.
I note when hands went up earlier on around people from the financial sector here today, I saw quite a good representation. I just completed a study of what your counterparts are doing elsewhere in the world and starting to experiment with this technology, and it's in 4 key areas. Number 1, digital identity. We're all struggling with money laundering, know your customer, know your business, know your government issues. The distributed ledger provides you with an immutable record of who you're dealing with from this point onwards, and then you can automate the process. That is of great value of interest to an international bank who just got a big fine because some branch office got into trouble because of fraud or money laundering or whatever the case might be. So big tick there. The next one is asset registries. You probably heard about Honduras starting a land asset registry on the blockchain initiative. I see a lot of those type of applications for any type of asset, digital, shares, a bond, a derivative, whatever the case might be, and again, the automation thereof. Big plays happening in that space. The next one, of course, is value exchange, and we've got some lead figures here from your local landscape in that space that will become increasingly liquid as the market starts taking advantage of these opportunities. And then last but not least, in the financial sector itself, applications around insurance, disintermediating the layers of agents and approvals and processes that your actual average consumer, citizen or customer needs to go through to get the job done, to get the money, to get the loan, to crowdsource or crowdfunding, which I'm hearing is starting to pick up here in Mexico and other Latin American countries as well, are the kind of 4 areas that are getting the most attention and investment right now in startups and in financial institutions starting to experiment with this stuff. And we can talk more about that later.
And we will. So just to sum up my view here, so Mark touched upon something that we haven't really talked about much here, which is smart contracts, which Symbiont is focused and specializing in, vis-a-vis a continuous real-time auditing ledger. Payments, remittances, very powerful. And of the 4 things Manie mentioned, I'm going to hone in on the identity. Identity vis-a-vis KYC, AML, Patriot Act, FATCA, which is not a joke, to be taken very seriously. It's changing the way commerce is done globally, and which leads, when you look at these 3 factors, smart contracts, continuous real-time auditing, payments and remittances, identity, with KYC, AML, and regulatory framework, you have the opportunity to bring reputational system, credit scores, and a way of transacting in LATAM that has not happened before. So, with that in mind, and touching upon each of those things that you've focused on, should financial institutions in Latin America be looking at blockchain technologies? Should they implement distributed ledger technologies, and why? We see a very large remittance player like Western Union waking up 4 years late saying we should actually use this technology because if not, we'll be out of business very soon. In that light, Mark, touch upon a little bit on the smart contracts, continuous real-time auditing, and why financial services industries should implement them.
One of the things that got me very excited recently was to see Santander and BBVA in the news making investments in this area. Santander participated with Oliver Wyman to do a fantastic report, all the different ways you can use the blockchain, so very forward-thinking. Estimate of $20 billion can be saved in the middle and back office. So when you start to think about those numbers and you think about these new participants and you think about this in the context of LATAM, right, it becomes not a question of can you do it, but do you have the will to do it, because you could actually become a market leader very rapidly if you have the will to deploy this technology and to do things that aren't being done anywhere, as you pointed out before, credit scores integrated with your own identity, and then folding all that into distributed ledgers with smart contracts that allow for real-time auditing, not just from a business standpoint, but a regulatory standpoint. One of our use cases at Symbiont is a front end for US-based regulators to set up surveillance and real-time audit our permissioned ledgers. That's something that's extremely powerful, never been able to done before. But also, because you have a single immutable ledger, and because you have cryptographic consensus on every transaction, and I'm not going to get into bore you guys with the details on that because it gets very wonky very quickly. But when you have a smart contract, that's a legal agreement. And if you enter places where property rights are not as strong as they are in some parts of the world, or rule of law is at question, you can enter into a peer-to-peer agreement with a contract that you both cryptographically sign that goes onto an immutable ledger, which can then be audited in real time, not just by the two people that entered or 2 institutions that entered into the agreement, but everybody else who's on that network. That's extremely powerful. That's policing in real time. That's giving power to the people who are entering into these agreements. And what it does is it forces regulatory bodies and governments to innovate themselves because they should see the opportunities that exist. So it's extremely powerful. I think it's much more exciting to look at LATAM as an opportunity. For me as an entrepreneur, there are fewer barriers. There's not incumbents that are entrenched that you have to move beyond. What we do have in the United States is some very, very heavy-duty incumbents that are backed by regulators to keep people out like us. So we have to fight extra hard. So I think that those things in conjunction are extremely powerful for LATAM.
Thank you, Joel.
For us, the banks are necessary. I think they need to provide for us, a lot of last mile type of services. And I think, the more we are integrated with banks, the better the system works. So I think it's something that we need to probably learn in the next few years to work around. And I also think that there is a whole new opportunity, even inside banks, to create these new business process outsourcing financial services using this technology. And I think it's gonna happen. I think the banks are gonna adopt the technology and offer new services to their customers. And I think that's why we are all here.
Thank you.
I think the role of banks are crucial going forward, and if anyone has heard these speeches some people make around the whole banks are going to go away, everything's going to disappear, we're going to come up with something brand new, I don't believe that's the case. It's going to be a hybrid model where banks have invested deeply in business processes, in becoming trusted partners, and with transparent processes. In the majority of the cases, which I think the startups can learn from and integrate with, so we deliver a better, faster, more efficient service to the customers out there, business, governments, and so forth. So what these technologies provide us are the rails into that future, into which I see both sides working together or coming together. That's going to be the great convergence, as I call it.
Thank you, Manie. So my conclusion is that this is not something you could ignore. You could choose to ignore it, but this will endure and it will prevail. I think the intelligent, rational, logical fintech person will see that blockchain technologies will do to banking what the internet did to commerce. Now, I was told by a dear friend who runs a fintech lab inside of one of the largest Spanish banks, not BBVA, and he told me, the financial services industry, banks are not broken. They are just very old, and the system is not modernized. So, with that in mind, I think, based on your personal experiences, what are your use case inefficiencies that you see financial institutions might be keen to focus on? I understand Symbiont is working on something in particular. You've made a use case which is pretty obvious, and many you have as well. So why don't you kindly talk a little bit about, say, T+0?
Sure. That's a kind of a trendy thing to say nowadays, T+0. So who is familiar with trade date, settlement date, and the difference between the two, right? So in the US, it's T+3 for equities, right? So it's the trade date plus 3 more days before things settle. So this idea of T+0, everything happens in real time. It's interesting because there are reasons why T plus something exists, not just technological, right? The systems are antiquated and old, agreed. The thought process is antiquated and old as well. And the regulation that goes around it is antiquated and old. So when you have those 3 components that are all working off of antiquated theses and antiquated technologies, you have a hard time changing and innovating. So at Symbiont, we have kind of shifted the dialogue, and we're not even using the term trade date, settlement date, T+0, right? This is all happening now prior to or at the point of execution. When I say execution, that doesn't mean a trade necessarily. That just means agreement or consensus on a transaction. So agreeing to a contract, agreeing to terms of changing terms, agreeing to a new interest rate that'll drive a potential instrument. So we talk about those in terms of a reckoning. I mean, if you understand the term reconcile, it comes from reckon, which is an old word, which is basically to settle the ledger. And a reckoning is, if you look at it from a very broad biblical term, right, there's a day of reckoning coming. The day of reckoning has come for traditional fintech globally. And that reckoning is being driven by distributed ledgers and tokenization, smart contracts, and the use of cryptocurrencies.
Thank you.
I think it's about speed, it's about real time. And I think, the banks already are paying third parties to do some of these services, right? The settlement between banks and the settlement between banks abroad or in different countries. So adopting this technology can really provide, low-cost solutions, real-time solutions. And I think that's where, they need to look probably at new business models where this technology, because you don't have this third party, because it is it's a definite transaction, it has some advantages. And I think as media companies, at some point had to look at the internet and see, what are the new advantages and how to sell now the news using the internet. I think, blockchain and Bitcoin is exactly that. It's a new technology class, and new services have to be defined. It's not selling newspapers over the internet. It's not selling banks over the blockchain. I think it's new services that have to be developed considering the new features of the new technology class that we are basically building.
Thank you. Manie.
My prediction in the space is, and I know we get a lot of newspaper headlines, at least where I come from, Vancouver, London, where I've just spent a month, around the new things that's going to get invented through cryptocurrencies and the blockchain. When you talk to the banks, my background has worked for nearly 20 years for Barclays and Vodafone, which spawned the M-Pesa initiative. Very exciting mobile phone payment innovation and some new pivots that's coming out of that. Two key things that come from the bankers is they're looking for efficiencies, they're looking for competitive advantage. And I see the majority of the applications of this technology being quite mundane, creating those efficiencies, automating processes. I worked in both the back office and the front desks in both cases, Vodafone and Barclays. They're looking for ways in which they can make processes run more smoothly, that they can make less mistakes, they can get to the customer more cost effectively, and they address, for instance, we keep hearing about the unbanked or the financially underserved, as I prefer to call them. I think the majority of the people on the planet don't need bank accounts per se, but they need access to financial instruments that suits them at their level, and it could be micropayments. That's where this technology could really come into its own and give everybody an on-ramp into the digital economy of the future.
Thank you. So, there's a little financial technology or technology fact known as the diffusion of innovation. Diffusion of innovation is one of my favorite things to talk about when I'm talking about blockchain because, banks are usually not known to be innovators. And of the 28 banks that we have spoken to at R3, which is a company that I am an advisor to, I would have to say that BBVA is by far the most innovative bank I have been exposed to. But they are the exception. So the diffusion of innovation says that 2.5% of the market will be innovators, 13.5% of the market will be early adopters, 34% of the remainder of the market are early majority, 34% are late majority, and then 16% are the laggards. Laggards are the ones who buy digital phones because they don't make rotary phones anymore. But of those, who are you? What financial institution or financial services firm will you be? Maybe you don't want to be an innovator within that small little bucket. Maybe you want to be an early adopter. I think that you could say that being an early adopter has its risk. Being part of the early majority is safer. But with a technology like blockchain, is it safe to be safe? And with that in mind, what are the business models, and should banks form a consortium? How do they start? Is it better to innovate together and move forward? What's your opinion on that?
So I have a saying that banks want to be first to be second. So they want to watch and wait, let someone else be first, and then everybody piles on when you see something working. I am not a big buyer of the consortium model. Aren't these distributed ledgers already peer-to-peer? Aren't they, by happenstance, a consortium? aren't the participants on the nodes participating openly without having to agree and come to consensus, no pun intended, on how these things will be structured? Can't you participate in this distributed ledger and get all the benefits of a consortia without having all the problems? I don't know if anybody here has participated in a consortium before. I certainly have tried to vend to one. It's extremely difficult. And when you have to agree upon something amongst a group of very strong financial institutions, you end up compromising. And there's no need to compromise with blockchain technology. It's not a necessity. You can choose to participate on a node the way you want to participate. And with new technologies that are being built, you can create things on top of these new consensus mechanisms very rapidly. So I'm not a big buyer of consortium. I think that you're better off having the idea that every single institution is its own little laboratory, and when someone is successful, then everybody can replicate that. But when you try to get together, you probably lose some of the innovation you're trying to find.
That's a strong point of view. Joel, keep in mind we have
down
to the stretch.
I think the financial services are becoming more financial technology institutions, and if we look at the history, the best technology companies are probably the best at merging and buying the innovation and the companies that are out there. So I think these open innovation models are the right play for the majority of the banks. I mean, they will never have the money to do the research and development that is needed to improve. So I think there are some things that can be developed inside, the ones that are most important and tied to your core value proposition. But I think you need to look out there and buy. Just because of time to market, this thing is moving so fast that if you wait and try to develop your own things, you are going to be late to the market. And we know, at least in technology companies, my experience is in technology companies, it's all about time to market. So if we're not ready to deliver, somebody else will, and that will be the cost.
Thank you, Manie.
I'm not here to tell any country what to do, but from my experience in Canada, where I'm deeply involved, and London, where I've just spent some time with UK Innovate, it helps. I think all the financial institutions, to some degree or another, are going to have a lab of sorts. They're going to have a team or people looking at the solution sets, or they will work with the Deloittes of the world. I'm an ex-Deloitte director. Deloitte has got a team of over 100 people up in Atlanta, just up north, thanks to looking at cryptocurrency and the blockchain because of customer inquiries. And I know all the other big consulting firms are starting to do the same. So one could play that game, but you could also support the ecosystem through a fintech hub, which I recommend you consider. In Canada, we're relaunching our entrepreneurship visa specifically for fintech and to draw in entrepreneurs and investments to support the startup community. We bring in academia. All our leading universities are invited and bring their students to the various fora and startups and hackathons. And of course, funding is key and quite important, especially from the parties who have a vested interest: government, the financial institutions, and all the players down the value chain. Just a suggestion.
Thank you. So we're coming down to the last couple of minutes here, so I'll say a couple of words, and then I'll let everybody have a little closing statement. So to me, having been in banking, started as a Swiss banker where everything was about privacy, and then moving after the 9/11 event to the United States and working as a private banker in the United States and seeing the Patriot Act do what it did, I could say that in my experiences, banks have become law firms that use technology to do banking. I think it's thanks to blockchain technologies that I see an opportunity for banks to become innovative, technologically advanced financial institutions that will use smart contracts and blockchain technologies to harden identity, to settle transactions, to speed the way communications amongst banks, between customers are done, and at the end of the day, improve inefficiencies. So with that said, if you all have 30 seconds or more or less to say something that you would like this audience to stay with.
Sure, real quick. So who traveled internationally to get here? Okay, so did I. Who filled out the little form and asked you how much money you had on you in currency?
Everybody.
Did you have 10,000 or more, right? So I laughed at that. They didn't ask how much I had on my phone. So now just do a thought exercise and envision a day of how disruptive this can be. Your identity is created, it's cryptographically protected, it's put on a blockchain where your money resides, where all your counterparties have been vetted, where you can freely trade with anyone on a peer-to-peer basis, you can clear and settle transactions in real time, and you start to break down the walls of independent areas like LATAM versus this area, and we have one large global market where everyone is free to participate, to innovate, and to have one immutable ledger or multiple immutable ledgers for use cases, and to be verified and transact freely, and we could all be value traders with one another.
Hear, hear.
I think we need to, new companies and new startups and banks will need to work together. And I think, going back to your, people that is actually acquiring technology or using technology, new technology, I think it's already part of the value proposition of the bank. And the whole new products from the banks will have to have these parts of technology. So I think at some point we probably need to work harder on the regulation side. I think that's one of the things that on the side of our industries is very important. We are, of course, trying to be auto-regulated because we are not, and we have to work with the regulation that is already out there. And for me, it's about collaborating as new companies and the already companies like banks are working with us.
Thank you. Manie, expired, but.
Just in conclusion, I know we're out of time, is if I was either an existing player, an existing financial institution in the space, or a new entrant to the market, a startup or an entrepreneur with a solution set, I would look at the overall value chain. I would look at the pain points, I would look at the opportunities, I would look at where we can create efficiencies and start in those areas of focus. We don't need to boil the ocean here. We're not going to change everything overnight, but I think there's a terrific opportunity to look at where we can start at least tweaking and look at what solution sets could ultimately go across the board and benefit your business or the ecosystem.
Thank you. We'll be available for questions afterwards if anybody is interested.